Hello, it's Cryptolyze. I hope you are well this Saturday, November 4, 2023. So today we are going to do a weekly analysis, and we are mainly going to talk about Bitcoin and BTC in relation to the bullish acceleration that we have had over the last 2 weeks, the stabilization that we have had this week, but above all, we are going to return to the macro, in which we had a very strong acceleration at the level of the S&P 500, and the various indicators which lead us to perhaps reconsider the strategy that we have for the months to come. And in any case, ask ourselves the right questions to see if we are really still good in terms of our vision, and that starts right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training course worth €400, which allows you to learn blockchain, crypto, investment, technical analysis, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. Over the last 2 weeks, we have had a really strong acceleration in Bitcoin, which is mainly driven by the rumor of validation of spot ETFs by the different funds and by the SEC of the different funds, notably BlackRock, and in which we had a rumor which was really very important at the beginning and which is in the process of stabilizing now, but we have elements beyond which are in the process of growing. So we will come back to that in a few moments. Keep it in mind. But that does not prevent the notable element of this week from being the monstrous acceleration of the S&P 500 and the Nasdaq, with news that was not necessarily very positive at the same time. So we had a form of duality between the two, and it's very interesting to see that because as you can see, the weekly closing that we had is just monumental. It's been a very long time since we've had weeks like that, and that leads us to reconsider the strategy we have had since a certain time. The vision that we have had for a certain time, and it will be important to be able to determine key levels in which we will have levels of invalidation or levels of validation subsequently. And we will necessarily result afterwards on what will happen for crypto and in particular BTC with the endogenous elements specific to Bitcoin and the elements specific to the cycle that we have with the notion of the line. And all of that, we're going to start with the S&P 500 with the upward acceleration that we've had. We're going to do a little bit of pure technique in which we're going to actually dissect this bearish acceleration that we had at that time, followed by the effective retracement, and then the movement that we have there. So what is interesting to see is that there are two visions which are confronting each other. The vision of a classic ABC of a continuity of trend, in which we could have a C which could be relatively low or even go for that level, in which we also have a cut which is different, in which we have a structural retracement which took place in 5 times with here, an acceleration in 3 times, therefore which would then wait for a bearish acceleration which is repeated in 5 stages for this bearish continuity. There, something that could be a little complicated given what is happening, we will come back to it a little bit. But above all for me, the element really important, it will be to concentrate on this level. For several things, because 1, we had this bullish acceleration which is a retracement of the bearish breakout. So okay, we all agree it hasn't changed. But what will be interesting to see, it is when we trace a Fibonacci retracement level of this bullish acceleration. We have 0.5, which is not yet reached, and in which we have a relatively strong bearish acceleration. And for me, on this, we have a strong signal that we will certainly have a structure which will be different here, which will be something which will certainly be in 3 times, which will be in 3 stages, first impulse, second impulse, third impulse, in which we could look in particular for an incursion below 0.5. Why is it important? Because here when we return below 0.5, it means that we will look for key levels of support, which were the key levels. Acceleration to the level of the S&P 500. And when we look at it technically, initially I was going for a bearish impulse retracement, second bearish impulse. So a classic 3-stroke to have a 5-stroke impulse with something that was more powerful in the momentum, with something that was going to look for fairly strong levels like 1,610 before having a retracement, a bearish continuity, and a bearish breakout. The acceleration of this week makes me reconsider that and makes me determine, in fact, key elements to be able to determine, because for me, we could very well also be in this schematic with an impulse, a retracement. Second impulse, whether in flat or whether in extent or with quite simply a retracement which takes place here, and a bearish continuity or even a bullish acceleration where quite simply we would have a breathing which had taken place. Here simple and then an acceleration, an upward continuity. So what are the levels of invalidation? Already the levels of invalidation of the theory that we can have of a two-stage acceleration like that here would be a break from 4,560. If we go for this high, that implies that we potentially have an upward trend that is taking place. In terms of pure macro, this implies that the notion of soft landing and hard landing would not exist. So that would imply that we would have an American economy that would be sufficiently resilient to completely recover. We're going to come back to that in a few moments because it's going to be important to be able to retain it because we have a few key points that are against that. And we're going to see them later at the TTL level and at the CDS level in which, well, we still have a little fear that is happening. But it's a scenario that we keep in mind. The very simple continuity scenario could be here, on a retest of 4,330, which we have already had in mind for some time, in which we would have a key level for a bearish continuity. Okay, so these are the levels to keep in mind, especially since we have the bullish acceleration this week. When we see this type of candle there, well, in fact, we absorbed the previous one, we almost absorbed the next one, so we reabsorbed 2 weeks of bearish continuity, and when we look at the power of this candle, well, it's this candle, okay, which were the beginnings of an acceleration that we had there. So here we cannot consider that we are still in a continuation of a classic downward trend. We are obliged to re-examine this notion of soft landing, this notion of hard landing. We have reached a key level that we had here for the soft landing, except that the rest of the indicators are not aligned. And that's why reflection must continue, and we must readjust systematically. And I think that in the coming weeks, we will have a series of readjustments because we do not yet have all the indicators. When we look at the NASDAQ is much more impulsive and much less retracing. And so that's why I'm telling you that certainly we are in a breathing dynamic here in 3 stages in which we would have a NASDAQ which would, even without necessarily breaking this level, okay, we would have a bullish reaction, we would go and retest this level and then make an effective retracement to then leave with an SPF 500, which would perhaps be a little less pretty to see, in which we would have something which would be like that with a little continuity to go and retest this level, which has an important level, the 4,100 and the 4,000. Before starting to rise again and starting again, so there we will in fact have a soft landing scenario which will be put in place, classic, in 3 stages. Because currently we have had a whole categorization of news which was negative, finally positive throughout this bearish breakout. And there we are in a momentum and a narrative which is rather positive. But we will have a rather negative return here in the acceleration and then vice versa. So we will be very careful with this notion of manipulation. News in which we will necessarily have to position ourselves systematically inverted. So why am I telling you this? Because also when we come back to oil, we have something which is quite nice. We have closed underneath. We closed below. Yes, we have this retest. But what is interesting to see is that we also have this dynamic of positioning ourselves as being here a bearish impulse retransmits a second bearish impulse. The question is, are we going to close below 77? By the end of the year, are we going to be below the 77? If we are below the 77, that implies that we are going to set up this ranging that we have had in mind for some time, between the 95 and the 70, to oscillate there before having a breather, stronger over time, maybe a year, 2 years of oscillation before having a breath. On the other hand, if we close below, it means that we have just made a classic retracement to start again at the other. And so this means here a real acceleration in oil and therefore very strong pressure on the American economy and all world economies in which we will have inflation, which will be complicated to maintain, whether on producer prices, whether on services or simply on energy supply. And on this, we will really have to take a step back from that because these elements also mean that we would have a continuity of global geopolitical tensions without having a conflagration, but in any case a continuity of hostilities and therefore necessarily a pressure which would be exerted on the different sources of energy, therefore on gas and oil. And therefore behind inflation, which would remain at a relatively high rate, linked mainly to its oil levels and its energy levels, okay? So that's really important, and we're going to have the answer very soon. I mean, we're really not far from the 77, so it's possible that if we do another candle like that, next week we'll have the answer. If we ever oscillate and we still have a little breathing, it could play out in a question of 4, 5, 6 weeks, maximum, in which we will have a fence, and in which we will also validate the monthly closings, which will be very important, and we will see this in additional videos. So for me, we have oil, which will play a lot on the implementation, and which will determine whether or not we will have the capacity to make a soft landing, especially since we have the establishment of a certain tension and relief of tensions, because we have here a weekly closing which is in the process of being done on the 10-year vice in which we had had an acceleration. Very strong. We have a bearish divergence which has already been present for several weeks. So here we closed well below. So we have a potential start of a bearish continuity. Well, in any case, an effective retracement. So it is very likely to see something that will go like this. Hop, a retest, and then a bearish continuity. And what we are targeting is the breakout of the 3-5. There, we have a relaxation which is necessary for the obligations. So for me, the only thing is that it bothers me a little for several things. It is that, one, yes, we have the TTL which is breathing. So we are in the process of swallowing, which is rather positive for the banks. But on the other hand, we still have the CDS. Which are in the process of rising. Then the CDS is the insurance which is present on the funds in which we see that the CDS are in the process of rising. And these are the CDS of the United States, 5 years and 10 years C, it's the same. We also have a cycle which is taking place in which we have the peak, which was made here at the level of April 2023, which is rather classic with the breakout of SVB and everything that we were able to know at the level of American regional banks, and we have the second acceleration which is underway, to be done. And there, that means that we have a tension. That is to say that there is a very strong tension which is present on a potential default of American bonds. So something which is theoretically almost infeasible because basically it is considered to be the safest and most certain product. But that means that there are investors who are hedging against a potential debt default. And when we see the CDS, we take a step back. We see that in 2010, we didn't have that, okay? So we have CDS, which are still relatively weak during periods of crisis, which were relatively strong, whereas here we are in the process of getting back up there. So that means that we have a vision of tension, which will remain for a long time. For a certain time, and which confirms to me a little this vision of long-term investors who say to themselves that overall, yes, there is a possibility of default within 5 years, within 3 years, within 10 years at the level of the USA. And when we see a CTS which rises, it is a sign of instability. So that means that instability will play a role. Will play a role on what? Well, it will obviously play on oil. Therefore, energy materials will play on gold. Therefore, safe haven values, and will also play on equity. Which is why I tell you that I still remain in my bias here from a second bearish leg to always seek my targets. At the S&P 500 level. So S&P 500, we are here below 4,000, between 4,000 and 4,100, or even go for the 3,800 with here a retest of these lows, which seems very useful to me. Coherent on Q1, Q2 2024. Because we are still here on other indicators which tell us that we have a tension in the unemployment market, which is in the process of being created. Something which I had already been talking about for some time. I told you that the rupture here that we saw of the 3 bits, if ever it was entrusted by a new acceleration, well, there we have here a reversal which is in the process of taking place. At the level of unemployment, we do not have a lateralization, but we do have here highs which are being established. We have lows and highs which are being established. So we have tension which is being established, therefore unemployment which risks increasing. And therefore tension, a reality which is being made at the level of the USA. Do not forget the reversal of the curve which we have had in mind for some time. Here, the return above zero is for me the signal of announcement of a recession, even if the recession will have already started before, and which for me would be the announcement of the start of a recession which would perhaps last 3, 6, 8 months maximum, 9 months, which would be something light enough to start again afterwards on something much healthier and start again with appeasement. Also, why not geopolitical tensions and behind a stronger breathing in terms of oil, and therefore something which would potentially retest the 80. So here a continuity of breathing, upward acceleration, and we would potentially retest the 90-95 or even a little higher to then start again downward, and therefore a structural breathing at the level of the American economy, and also a remediation of geopolitical tensions in which we would have a breathing of the world economy at the global level. So we now have our invalidation levels. We also have our validation levels. We have a little bit of where we are on the macro. But okay, on BTC, what is happening? On BTC, there are several things that are being done. 1, the endogenous elements. 2, the value of BTC. And 3, the cycle. So the cycle, we know it, is the notion of halving in which we still have the mining industry which sees its revenues halved overnight. So that economically at a given moment, it has a real impact on the raw structural material, which is Bitcoin. And alongside, we also have the somewhat self-fulfilling element of what halving is. That is to say that everyone is waiting for the halving. And we know that there is a very emotional side that plays out in relation to the halving, in the weeks and months that follow, in which we have people who will buy because we have a decrease in the effective production of new Bitcoins. Because we know that the supply is determined, 21 million, we know that we have less and less accessible Bitcoins because people lose their wallet key. Because next to us we have people who hold on to the very long term, and therefore the number of bitcoins which are available for purchase and monetary transfers decreases. So inevitably we have an increase in the value linked to the notion of stock to flow that we know. I invite you to look at Plan B, who is the person who invented his truly stock-to-flow model, which is very interesting to analyze, even if it has inconsistencies, and it's a mathematical diagram. So at a given moment, it necessarily has elements that have been decided on purpose to be able to design it. But it's a good conceptualization. So these are the endogenous elements specific to the cycle. Okay, now the endogenous elements specific to Bitcoin and crypto. We have two. We have one, the regulation in the SEC for cryptos in general, in which we have a bearish pressure which is exerted on altcoins. And next to it, we have our friend BlackRock and all his clique who are behind it, in which we have the spot BTC ETFs, which are going to arrive, which are the entry point for institutional investors on products like Bitcoin, in which we have the representation of Bitcoin as a risk asset, in which there is a high risk but therefore a high return. So we also need to understand what it is. The BTC Spot ETF will allow institutional investors to be able to design structured products in which we will have BTC through the ETF, which will be included in it, which will be the risk part, the return part, which will be effective inside. On the other hand, it implies two things. It implies that one, yes, there is a notion of pre-funding which is present, pre-funding being the notion of if I launch an ETF, I have to buy the first shares to be able to create the pool necessary to be able to sell to my first clients, and then it will increase according to the actual volume, so that is off the market because it is done, given the volumes clearly in OTC, whatever it is happens. And second thing is that afterwards there must be people who buy. That is to say that if institutional investors do not put money into buying, if there is no one, there will be no real volume that will be carried out on it. And that we must also understand this logic. That is to say that we have a valuation which will be carried out in relation to the risk reward. That is to say that an institutional will not position itself on a risky asset as long as, for example, we have rates that will be very high. When we see a 10-year rate which is still above 4%, while we have inflation which is around 5, well, there is no point in taking risk. Namely that I have a real yield, which is greater than 1%. There is no interest. So there will be very little volume as long as we don't have a bearish breakout, a breather on that, and behind an inflation that will take place. For example, inflation will rise and therefore a real rate will decrease. So for me, it is an event which is also largely driven by news, rumor, and news. And this is clearly visible in relation to the false news that we may have had, the false validation, the false news, that we were able to have, the communications which are very present from one side and the other, from people on the fact of having the upward acceleration that we have there. And I will always remind you of several things. We always have a tendency to try to manipulate others, to try to create a form of confirmation, what we call confirmation bias, the fact of validating that we have reason to think that. And precisely when we were here, we were in a bias which was bullish, saying, well, it holds, we are in a bullish quantity. Don't worry. In any case, we are going to make a new 88th. It's a supercycle, and we won't break again. Not at that level. And there were very few of us at that time to say, well, listen, there we still have a big risk of saying to ourselves that we are in a breathing phase before having a bearish continuity, and that this lot, at a given moment, it still has to jump. Whatever happens, because the macro is disgusting. Because there are lots of endogenous elements, which mean that at a given moment, we have to have very heavy breathing. And on that, there was a pressure that was very strong on those who said that we were going to break bears because the momentum was mostly bull. We had a breathing space. There was a fear. There was a lack of understanding of what is happening. And then we had the fund on bears. Here we had the opposite. We had there. Don't worry. In any case, here we go to 10K. There's no point in buying. We will look further down. And those who were bull in this place by saying buy, yes, we can go lower perhaps. But this is a level which is really very important. We were on the concept tank time, okay? We were really on this idea of saying, okay, well, we'll look further down. There were very, very few of us who said that we had to actually buy here in this area, that we had fear, and we bought the fear. Okay, well, what methodology are we using here? In your opinion? Are we in fear? Are we greedy? What exactly are we in? We're there. The number of times when I say that we just have to be careful about what we can get, even if it's just a pullback at 31,000, where people tell me, well, no, but in fact, you are a bear. No, I am not a bear. I am just consistent in saying, okay, I am just deciding, okay, we have an effective acceleration there, which is carried by a new no, which is driven by a macro no. Finally, at a given moment, you just have to be classic and tell yourself the market at a given moment risks breathing. If it breathes, I prefer to be prepared and tell myself that we are going to have a breathing space. So being able to buy either at this level or even why not a little lower. At what point would it be incoherent to say that we are going to break here? We are going to retest on the 31,000. We are going to re-break lower, because there we will simply have people who will short massively. To say that this is it, we are going to re-enter the lower part to retest the 25,000. When is it inconsistent? It's just a notion of temporality. Is this going to happen tomorrow? No. But can it be done in 3 minutes, 4 months? Yes, as it can be completely coherent if we take a step back to say to ourselves that we are going to be in a zone of delay or even acceleration at the level of BTC, because we had when even here a quarter which was very positive. So the quarter has only just begun. Here we are on November 4th. But we had a quarter which was rather positive, in any case which seems rather positive, and when we look at the past, well, the notion of fractality in the past with 3 occurrences, I agree with you, it remains relatively limited, but we generally have breathing phases before the halving. The halving is here, located approximately in April-May 2024. It fluctuates because it's blocks that fluctuate in terms of time, but the same, here we have a form of delay which is taking place. Are we in this candle before? Maybe. And at that point we'll have an afterbreath, so we'll also have a pullback. Are we going to go straight up with the validation of the ETF? Well, yes, but do you already know when the ETF will be validated? No. At the moment, we don't have a date. It could very well be tomorrow, like Q1 2024, like why not March 2024? In the meantime, we can very well have breathing and stabilization, as we can have the validation of the ETF there with an acceleration over that quarter, and behind afterwards, well, a breather, because quite simply, once the ETF has been validated, the news has arrived. The people took advantage of the news. And so at that moment, we have a breather. And we will have something that will start at the halving level. And on this, we must also pay attention to the macro, even if behind it we have this notion of real decorrelation at the macro level. Because when we look at what we are having here in relation to the acceleration bullishness that we had this week at the level of the S&P 500 and the NASDAQ, BTC did not move. It remained flat. Small acceleration, but we remained relatively flat. So at a given moment, we have this decorrelation. So we cannot say that we have one which breaks, therefore the other will break, etc. No. On the other hand, we have the correlation which is linked to the ETF, which will give weight to this news. The BTC Spot ETF, I remind you, is a door to institutional investors who will inject liquidity into it. At what point does an institutional, in a macro, which is very complicated, in a geopolitics, which is very complicated, will allocate a significant part of its capital in a risky asset? You just have to position yourself on that. It is in fact the flow, the influx of money and therefore of cash which will enter the crypto market will be linked to this type of positioning, and it is not institutional investors who will consider that BTC will be a safe haven. It will only be there already, I think, in a relatively long time, and only if we ever have a monetary catastrophe in which, why not we, would have other banks which will collapse. So at that point, we will look for a refuge mode because the dollar is collapsing or because the USA is capitulating in terms of its debt. Well, this is a scenario which is a bit of a disaster. So yes, we will have a valuation of BTC, but will we have a valuation of BTC in which it will be linked to a devaluation of the dollar or a valuation of pure BTC? Well, this is a world in which we don't necessarily want to have an analysis right away because it's something that will be a little longer term and in which we don't want it. Clearly, we absolutely do not want it. What we want is the establishment of a soft landing with real breathing, and in which then, once the ETF is put in place and the soft landing will be validated, we will have an injection of liquidity which will pass through the ETF with a return of the correlation between classic assets, equity, and BTC, and therefore cryptos and Bitcoin to have continuity. So, am I bull or bear? That's the big question I get asked regularly. Clearly, I'm bull. I'm clearly bull. It's just that I consider that there is still a very significant probability of going to retest the 31. Of going to retest the 25. Does retesting the 15 for me in its current state seem coherent to me? I want to tell you no. I want to tell you absolutely not. Retest the 23, 24, or perhaps a little lower the 21. There is still a small chance that this could happen with very strong news in which we could have, for example, why not a very strong conviction at the level of the SEC on key protocols in which we would have very, very strong regulation, very badly. Or why not an element like Binance, which is lacking, something which would be really very strong and endogenous to crypto, which could take us very down. When I see the correlation between the two, even a hard macroeconomic landing would not take us to 20,000. At present, it has been decided. Could take us to retest the 26,000, 25,000. Yes, maybe, but still, I'm not even sure. And so that's why I'm telling you that we have to take a step back, and we have to readjust once again the idea and the conception of technical analysis and trading and long-term investment. It's not about seeing the future. It's about defining a strategy, defining areas of intervention and systematically adapting to different news and different cycles. Yes or no? Is it still consistent with what we have? Should we readjust and redefine invalidation zones and validation zones to be consistent in our analysis? I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy and it supports the work I do. And we'll see you tomorrow for a slightly special video.